Okay, and we're back TradingView. This is my second time around publishing this video because something happened with my last chart that I was posting. Not sure what that's about. But yeah, just an update. So you didn't see me post a ton last week. I had a lot of stuff going on, even including today. Today is my 1 year wedding anniversary, right? Pretty cool. Um, so just back and forth with some traveling this past week. We had some like a little retreat and stuff that me and my wife went and did, but we still traded some. I didn't trade as heavily as I usually do going into a Thursday or a Friday. I was kind of a little more reserved in the market. Still took some trades, but they're more so scalps versus longer holds. And longer hold for us, if you've been watching the channel or watching TradingView, is usually like 4 hours. So yeah, definitely a shorter term trades. This past week we had 200 points in the market. The previous week we also had 200 points in the market, and the week before we had a little over 300 pips in the market. So, and the week before that it was a couple hundred points in the market. Least to say, we've been taking some very high quality trades. The trade setups have been here. The key thing right now inside of the market that I can say and speak to is patience, patience, patience. Wait for the setup. Don't force your entry. Don't force your trade. If you don't see anything there, simply just walk away with the market or walk away from the market. Because if not, the market's going to walk away from you, and it's also going to take your trade account with you. Or if you're trading prop firms, it's going to blow your account as well. I'm seeing a lot of posts recently on YouTube, people talking about blowing their accounts. I lost this account. I lost this account. This is how much money I lost. And the only common theme that I can come to at the end of the day is you have to be patient on the setup to develop. And there's nothing wrong with waiting, 3 days, a week to take a trade. You're not going to find high quality trades every single day in the market. And if you do, they aren't high quality trades. You may see a trading opportunity, but it's not a high quality setup trading opportunity. There's a difference between what do they call an A plus setup and just like an average setup. Or for us, we call it a high probability setup versus a valid setup. And for us, we're just simply waiting for high probability setups right now, especially inside of this market, because when you find your high probability setups, you're risking 1%, but you're going to get back 6% to 15% on a single trade. So definitely worth the wait. But without further ado, let's go ahead. I'm going to jump into this thing. As we usually do, we're going to start with our top down analysis, especially if you're watching this far in, which hopefully you are. But we're going to start with our top down analysis, and we'll just go from there. Something that we have been doing more often is we're starting off on our monthly time frame. Now, this has been super crucial to see where we are in the market. Okay, so let's delete this off. And look how our monthly just opened up. We had this huge candle closed here. Prices already wicked down on the monthly into this area. So we already had a wick there. And now price is kind of closed back above, and we're pushing above this area. So we're curious to see how it continues to push in this area. So the next thing I'm checking is I'm going down to my weekly. Now there's a couple things I spot on my weekly time frame. We have this pattern that just formed here, which I'm going to draw my trend lines onto. But on our weekly, we just got to close back above this area. And so what I want to see is it closed on this area above this like support and resistance zone on the weekly. But our new week just opened up, so we could get a test and then close back above. And if we get a close back above, we could be looking for gold to go higher. I'd love to get a rejection or a clear close back below here on the weekly, giving us a big bearish candle. So something like this right here. Be patient with me just for a sec. Here's what we'll do. We're just going to change that to red. Just like that. That's what we want, is a nice big close back inside of price there. So I'm going to delete that back off. That way my boxes aren't all a different color. Now we're going to drop down into our daily time frame. So we have our monthly outlook. This was our wick down that we saw, this little area of consolidation, which you're seeing on the daily and the weekly. That was our wick down on the monthly. And now on our daily time frame, your structure is becoming a little more clear. Okay, so let's go ahead and delete this guy off. Our trend line goes back on to here. And I'm not going to draw our trend line over that space. I am going to draw this here. And there's a lot of area down here, right? A lot of empty space that's left behind. We had this liquidity zone down here that never got hit. So that's something I'm going to be paying attention to. There's also one here, and the main one is this one right there. This is on our daily, so this may change. Okay, there's another area price there. And look at this. We have 3 touches here. And let's grab our highlighter. We got an area here, an area here, and an area here. We have 1 touch here, 2 touches here, and then no third touch down here on the bottom of this flag. So again, I'm not going to get too caught up on our lower time frame perspective per se. Okay, I want to keep our weekly and our monthly in mind, especially in making decisions inside of this area of price. This is not one of those areas. Like, let me flip this for you. I know you've heard me say this before, but again, this is like trying to catch a falling knife, right? When price is going down like this and it's at the bottom of a trend line, especially moving with this much momentum, and it's at the bottom because I just inverted my chart, but you don't want to be catching the very tops and the very bottoms. You know, they call them sniper entries. Now, are there great risk to reward setups inside of these quote unquote sniper entries? Absolutely. I'm not going to deny you that. However, there's also a lot of room in here for you to get your account taken and for you to blow your profits that you've made, any progress that you've had over the past couple weeks, all just in this one little area. So it's better for you to, again, wait for price to tell you what it wants to do. Don't guess. This is nothing but guesswork in here. Like, we have this strong area of support and resistance that formed up. And we had a clear break above, sure, but we're also at the top 1, 2, 3, 4, and we're closing back below. So anything that I try and do in here is simply going to be guessing of where price is going to go. And if you're guessing of which way price is going to go, then you're no longer trading, you're gambling. So you're just putting money on the table just to see what might happen. And if you're just trying to see what's going to happen, you're better if you feel like you just have to absolutely trade. Then go in at a lower risk parameter. You know, don't go in at a full leverage trying to guess where the market's going to go in areas of price like this. Just to shore this up, this was one of the areas I was looking at as far as a pattern the other day. Price broke above here. Let me take this off. I'm hitting all types of buttons. There. Price broke, rejected this 1, 2, 3. Rejection, came down. It gave us this little area price, and then it moved up higher, and now we're getting a rejection off of that. So this is the 4-hour time frame. I'm going to go ahead and delete this off. This is just for reference. Now, this was the 4-hour zone I was telling you I saw, but that's invalid. That's not, or the daily liquidity zone that we'd spotted, right, when we were on that weekly and daily time frame. This was the daily, but it's invalid because price pushed up and now it's rejected and it's came back down, grabbed this area, formed a little bit of rejection, and now it pushed higher, giving us this. Okay, so it already took out this liquidity down here. So I'm not going to keep that liquidity zone. That one's null and void. Instead, it now becomes this because this was a lower time frame liquidity. where it grabbed it, but it never grabbed all the way down here to then go higher. So I'm going to leave it as this one right chill. And then up top, we'll look and see how this shapes up on our 15-minute and our 1 hour, but that might be my 1 hour. So let's go ahead and do this. Weekly LQZ. We're going to shape this up as our daily LQZ. This one's going to be our 4 hour LQZ. And then we're going to look for a 1 hour possible rejection area. And the liquidity zones for me aren't just like, oh, look, they have to come down and sweep liquidity. No, I'm not so much using it as that. It's more so I want price was never, it's a reversal point. That's a high probable area where price will reject off the area, or we're going to get some type of breakthrough of change of momentum. You know, that's kind of like the tilt point for me. This was a beautiful flag we had the other day right there. And then we also had another beautiful flag here that we took. And here. That's an ascending channel. And our ascending channel was right after our break. So we had a break above. Price continues up. There's a small flag in this area, small flag in this area, and we took price all the way up to this high. So we have tons of great trading opportunities. And look, there's at least 5 to 7 high quality trades in this market if you are being patient for the setups. And you're going to hear me say it again, being patient for the setup. Just because patience pays. Look, liquidity zone down here. If you waited for liquidity to get grabbed, you could have taken it to the top. All right there. So that would have been your liquidity zone for price to get grabbed. And if you didn't want to, after liquidity got grabbed down here, okay, price pushes up and it gives you a flag right here where you could have taken your long position just outside the break of this flag, stop inside of this area right here, and again, taking it to the top of this trend line for 350 points. And gold's just throwing out these moves. You just have to be there for it. And it's not just gold, it's all other trades as well. You've seen me mark up NAS, you've seen me mark up US 30, all types of different pairs. It doesn't matter what the pair is, the market's the market. If you have a set strategy, a mechanical strategy where it can be replicated across any pair, stocks, cryptos, ETFs, futures, it doesn't matter where you apply it, your strategy should work. Now, do some markets trade different? Yes. 100% not all markets are the same. That's just common knowledge. But your strategy, your edge should be something that can evolve with any market condition. It shouldn't just be reliant on, well, you can only use this moving average on this time frame within this pair or this currency or whatever it might be that you're trading. That's not so much a strategy. It's just that's what's working for right now. So what you really want to do is position yourself in the market where you have a mechanical edge that you can take to any market at any time, and that strategy is going to play out and has been back tested for, not just like a year, 3 years, 5 years, but 10 years beyond, 15 years has been tested. And you can go back and find these similar edges. And yes, the market changes and there's evolution in the market, but not so much in the way that you're thinking. It's not like price is just acting crazy and it's changing out of nowhere and you have no clue what's going on. No. If you don't have a set strategy that is actually applicable to any market you go to, of course it changes around. But just some markets are a little more volatile during different times of the year. Some are slower, but it shouldn't matter about that. You should just have an edge where you can come to the market, have proper risk management, and take a trade and be profitable. So back to trading. Our little rant out of the way. So we're popping open our, let's take this guy off. Again, we don't want to clutter our charts. So that's gone. And I'm spotting one more right here. That's going to be a lower time frame. 15-minute LQZ. And look how price is just barely broken above this high. So let's zoom back out to our hour. Okay. So on our, remember our weekly and our monthly, how price looked. We were at the top of the structure. On our weekly, we just barely got a close above, is what you saw. And now our new week is opening up bearish. So we'd love to see, is there going to be some type of pullback in the market, especially after having that big of a move, right? It's you know, I'm not going to use the word overextended, but it's out there, to say the least. It's barely pushed above this area. Price has been moving not impulsively, but correctively into this area. Okay, because an impulse would be massive candles like this. But if you took away just that one candle, just for instance here, let's just take away that one impulsive candle and look at this move. Okay, so we're going to leave this here. We're just going to move it over and just kind of replicate this, okay? And then we're going to just grab this other piece of price right here. And now look how price has moved into this area. You take away one impulsive candle and look how price has moved to the top of this area. So sometimes you see these massive moves in the market, or these big candles, and like that's your whole, one candle determines the whole bias for you. And it shouldn't be like that. So yeah, we're going to just see now. We might get some type of flag in this area, maybe a false breakout to the higher side, something like this. Catching people on the wrong side, giving us some bit of structure, like so, outside of the market, then giving us a push back in where you'd see a flag in this area, and then look to take your flag lower if we're getting a rejection back inside the market. But if it don't, we'd love to get a huge impulse outside of structure with the flag here. Okay, something like so. And then taking price higher to the top side. But key thing, if you didn't catch it the first time, when we're in areas like this, it's okay to miss out on the market for a day or 2 days in order to get some clear indication of where price is going or heading. So that way you can just ride the wave. You're not trying to create a wave, because more than likely you're not moving enough money in the market for price to move. You want to ride on top of the wave that's already coming in. So, yeah, that's today's markup. Hopefully you enjoyed it. There's lots of little gems and nuggets inside of there. We had some great conversation, and I will publish an idea on this chart as well, with some clear insights into what I'm doing on, like, why did I look at the daily like that, the 4 hour, the 1 hour, etc., etc. So you can get a full top-down analysis. You can read it and hopefully pick up some stuff on top of it, maybe implement some things that you are congruent with within your own trading strategy. And as always, I appreciate you coming and liking the videos and you following in the first place. And I will catch you next Asia session when I drop another video just like this. Till next time, peace.